Hello everyone, and welcome to Cash Stash TV. Today, we're going to explore a fascinating and crucial topic in personal finance: saving. Saving is a fundamental practice that goes beyond simply setting aside or saving money. It is a key strategy to achieve financial security, especially in times of economic uncertainty, such as those we are undoubtedly experiencing today. Saving not only provides a cushion for emergencies, but also opens the door to opportunities for financial growth, long-term stability and, most importantly, a little peace and quiet in your life. Let me explain. By allocating a portion of our income to savings, we are creating a fund that can be vital in dealing with unforeseen events, such as illnesses, accidents, unexpected home repairs, etc. This emergency fund is essential, as it allows you to cover these expenses without having to resort to loans or credits, which can generate additional debts and increase financial stress. In addition, saving is crucial to achieving important long-term financial goals, such as buying a home, financing a child's education, or planning for a comfortable retirement. By establishing and maintaining a savings plan, we can accumulate the resources necessary for these goals, giving us greater control over our financial future. Now, saving during an economic crisis may seem like a challenge, but it is precisely during these times that saving becomes more crucial. During crises, income sources may be unstable due to factors such as unemployment or reduced working hours. Having savings in these situations offers a safety net that can cover basic expenses like food, housing, and utilities. Furthermore, during economic crises, inflation can erode the purchasing power of money. In these cases, it is advisable to look for savings or investment vehicles that offer returns above inflation, such as high-yield savings accounts, bonds, or diversified investments. Not only does this protect the value of savings, it can also generate additional growth, strengthening financial security. To achieve savings, there are strategies to save especially in difficult times, and we will mainly explain 3 of them. 1. Review and adjust the budget. It is crucial to take a detailed look at income and expenses to identify areas where spending can be reduced. This may include unnecessary subscriptions, eating out, or impulse purchases. 2. Set savings priorities. Treating savings as a fixed priority, just like any other bill, can help ensure that money is set aside regularly. Even small amounts can add up significantly over time. And 3. Use financial tools. Taking advantage of tools such as financial management applications can make it easier to track expenses and meet savings goals. We believe that it is healthy to analyze the benefits and disadvantages of savings from a detailed perspective. Benefits. 1. Financial resilience. Savings act as a shield against unforeseen events. For example, if a medical emergency or major home repair arises, having savings prevents the need to go into debt, which could worsen the financial situation. This resilience allows us to face crises without sacrificing basic needs or compromising long-term economic stability. 2. Growth opportunities. Having a solid savings base not only serves as a backup, but also opens doors to more lucrative investments. For example, savings can be used to invest in the stock market, purchase real estate, or even start a business. These investments can offer significantly higher returns than a traditional savings account, helping to grow your wealth over time. 3. Peace of mind. Having savings provides a feeling of security and tranquility. The certainty of having funds available for emergencies allows people to plan their lives with greater confidence, knowing that they can face any unforeseen event without falling into debt. This peace of mind is a crucial component to overall well-being, as it reduces financial-related stress and allows for a better quality of life. We can find disadvantages of saving. 1. Limited returns. Although saving is a prudent financial practice, traditional savings accounts typically offer low interest rates, often below the rate of inflation. This means that the purchasing power of money can decrease over time. For example, if annual inflation is 3% and a savings account offers 1% interest, the real value of savings is reduced, eroding capital and purchasing power. 2. Restricted access. In certain cases, some savings financial products, such as certificates of deposit, CDS, or term savings accounts, require that money be kept on deposit for a certain period of time to avoid penalties. This can be inconvenient if an emergency arises and immediate access to funds is needed. For example, withdrawing money from a CD before maturity can result in the loss of earned interest and, in some cases, part of the original principal. In short, saving is an essential financial strategy with multiple benefits, including the ability to cushion the effects of economic crises, take advantage of growth opportunities, and provide peace of mind. However, it is important to consider the disadvantages, such as limited returns on some savings products and restrictions on access to funds. Evaluating these factors and diversifying savings and investment strategies can maximize the benefits and minimize the disadvantages, thus ensuring more effective and secure financial management. A question that people usually ask themselves: save in a bank or keep it at home? The debate between saving in a bank or keeping money at home focuses on security and profitability. Keeping money at home, while providing immediate access, carries significant risks such as theft or loss due to natural disasters. Additionally, cash does not earn interest, which means its value can decrease over time due to inflation. On the other hand, saving in a bank is generally safer. Funds are insured up to a certain limit, and although interest may be low, at least there is some growth, which helps mitigate the loss of value due to inflation. In addition, access to modern banking services, such as mobile apps and electronic transfers, makes it easier to manage funds and track savings. In conclusion, saving is a vital tool for financial stability and preparing for the future. While saving during a crisis can be challenging, it is an essential practice that provides a secure foundation for facing adversity and taking advantage of opportunities. Don't think of saving money as depriving yourself of things. Think of your savings as a way to gain financial freedom. Thank you for joining us on Cash Stash TV. Before you go, if you enjoyed the content on this channel, please give us a like and subscribe to Cash Stash TV. Don't forget to hit the bell to receive notifications for future videos. See you in the next one. Bye.